Hey y'all, welcome back to my YouTube channel. My name is Alayla and I trade Trendlines. Well, today in this video, we're going to talk about my strategy from scratch. All the things that I do, all the things that I don't do, what I look for, what I do not look for. I caught this trade on volatility 10, and I'm gonna just explain the strategy from scratch, like everything that I do, everything that I look for. Alright, so if you haven't subscribed as yet, go ahead and do so. I really appreciate it. Like, share, save the video. Heck, do whatever you want with the video. But anyways, we're gonna go. So, we're gonna start on a fresh, clean page on volatility 10. Alright, so just to give a brief rundown, the indexes that I trade volatility 10 1 second, 10, volatility 10, B50, jump 10, and sometimes boom 600. I dabble with volatility 15 as well when there's a setup. Alright, let's get into it. So the first thing that you must do is when you go onto the chart, ensure that you see where the market is going, what's the directional move. Is it uptrend? Is it downtrend? Is it consolidation? Is it this? Is it that? That's all that you need to do. You need to see where the market is going. If it's consolidating, that's a no-no. We're not interested. If it's in a downtrend, that's when we come in with our trend lines. If it's an uptrend, we come in with our trend lines also. All right. So clearly, what we can see here, volatility 10 is a downtrend. It's in a downtrend. It's bearish. Alright, so wherever we can draw our trend lines to really outline the directional move, we come in with our trend lines so we can always keep in mind that the market is in a downtrend. Alright, let's just come in with our trend lines on the 24-hour time frame. We can start from the highest point on the chart. Let's just start with this candle. Ensure that you're using the wicks. All right, I don't use the body of the candles, I use the wicks. And as you can see, I have my magnet on. All right, from that high to this high right there. And because we're on the daily, we're gonna thicken these so we know that these are higher time frame trend lines. All right, so we've already outlined and marked our higher time frame trend lines. Now we should identify our key levels. So key levels are areas in the market, levels in the market, zones in the market, psychological levels in the market that that price uses to bounce off of, potentially returning to those areas as well. So if the market used it in the past as support, and it used that like price or that level multiple times, we can expect that, okay, the market can use this area, potentially use this area for new resistance, previous resistance as new support, etc., etc. So those are what I call key levels, and it's very important to highlight them because the market can potentially return to those levels. You can also use those levels as entries, exits, targets, the list goes on. So I use a horizontal line to come in with my key levels to really highlight them, you know. So we can say this level here is a key level because the market gave us rejections here. It tapped it, kind of close below it, and then reversed. It's still valid to me. All right, on this side of the chart, the market used it as resistance, and it also gave us resistance here as well. So this is why I'm saying it's very important to have your key levels on the chart, because if not, you sometimes don't really know where the market is going if you don't have them, you know. This is another area here. We have support, resistance, and then we have support here also, and then resistance. Very important to have your key levels outlined. We have two support here. Well, actually it's three. We have support, 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 support. The market can return to that level using it as resistance, or it breaks through that level, uses it as support as well, and then continue to the upside. So it can do that also. Very important. Okay, do we have one more? Do we kind of do. It's really tight. It's really tight, but we have support, resistance, supports, resistance, etc. So we have our key levels outlined. There's also one more down here. There's also one more down here. Yeah. Support, even though it's only one time the market used it on this time frame, if we were on Deriv X, we would have seen the market used it multiple times, but we have support here. The market used it kind of as support here too, and then it used it as a resistance. There's a small little one candle pullback here as support too, but we're gonna see that more on the lower time frame as we move down. I work within internal structures as well, so it's quite simple. You have your trend lines, outline your key levels. Whatever time frame you're analyzing on, you do your analysis, mark out your internal structure there. All right. Then we come in with our Fibonacci retracement tool. The Fibonacci retracement tool that is used to measure the depth of the pullback. Also, in this case, I use the Fibonacci retracement tool because I am not interested in a pullback unless it reaches to the 38. Unless it retraces to the 38% fib line, otherwise I'm not interested any at all. All right, that's just a rule I set for myself. I have to wait. All right, so we come in with our Fibonacci retracement tool. My magnet is on, as it should be. Let's just really, yeah, okay. So we have that retracement. The market pulled back to the 78% area there. It did, yada, yada, yada. No, this is not the setup that I'm talking about. I'm talking about the recent one. This was it previously. I'm just outlining it to show you something. All right, so bear with me. So the market pulled back to almost to the 78 area there. Are we coming with our trend lines? I came in with my trend line. Coming with something steeper. I actually caught this one also, but I closed it early. All right, I closed it early because my initial target, if you go on TikTok, the link is in the description below. If you go on TikTok, I talked about this before. I came in with an opposing trend line because I was in it from, as you can see, the first initial break at the top. I was in the market there. All right, then as the market progressed, creating lower highs, that one candle pullback is this one candle pullback here. Let me show you. On the 1 hour time frame, it has more candles. So this trend line I drew actually to really show you the pullback. Do you see that? It has more than even one candle. It has 3 of the opposing colored candles. So that's why I came in with the counter trend line to really trail my profits, and at the break of the trend line I completely exited. But that's not the setup that I'm talking about. I'm talking about the recent one that I caught afterwards. All right, so let's just delete this and let's use the box. This is where we were. All right, and this was the pullback on the 4 hour time frame. This was the last high. This high here on the 1 hour time frame, that was a high on the 1 hour time frame. The market pulled back to around the 78% area within the internal structure on the 1 hour time frame. Let me show you what I'm talking about. Do you see that? This is the internal structure between this high and this low. The market retraced to the 78. It came to the 78 and then pushed to the downside. That's what it did. So let me go on the 1 hour time frame now. we see the pullback happening on the 4-hour time frame. I came in with the Fibonacci retracement tool, and as the market progressed, it came to the 38 here, the market reversed, and then it continued to the upside, break past the 61, break and almost touched the 78. Now my price reversal zones are the 38, 61 and 78. So if it doesn't bounce, if it doesn't completely push to the downside after retracing to the 38, then I look towards the 61. If it doesn't break my trend line after the 61, then I look towards the 78. And then if it breaks my trend line at the 78 percent fib line, that's when I enter. All right, because this internal structure and everything was on the 1-hour time frame. We saw it on the 4-hour, it made the pullback on the 4-hour. We went down to the 1-hour, it still didn't break up, but it didn't give us a change of character on the 4-hour time frame. It didn't break above this high, so I went down on the 30-minute time frame, because this is a trend on the initially it's a trend on the 1-hour time frame. Went down to the 30-minute time frame. You have to do this if your trend is on the 1-hour time frame. Either go on the 15-minute time frame for an entry or the 30-minute time frame. If you see the trend on the 4-hour time frame, then you look for an entry on the 1-hour time frame. All right, if your trend is on the daily, you look for the internal structure on the 4-hour time frame. So when I dropped to the 30-minute time frame, now I came in with the trend line. I work with the wicks, as I told you before. You have to work with the wicks, all right, and make sure that your magnet is on. It really helps if your magnet is on. Look where my mouse is. I have the first wick there. My mouse is here. You don't have to put it directly on the candle. As long as your magnet is on, it's going to connect it. All right, remember, in previous of my videos, I say I draw the trend line after it reaches the 38. Do we see that the market has developed a trend here? It reached the 38, it developed the trend also. This is when I came in with the trend line. I've said this in multiple videos before. My trend lines can be drawn with only 2 candles, literally. Once there's a trend and you see that the trend is upholding the rules of what a trend is, your trend line can be drawn with 2 candles and it respects it. All right, and then you just wait on the break. So let's really draw it over and see. We're going to wait on the break of the trend line. Let's see what the market does. We enter at the break of the trend line. Do you see that the market broke? I entered. You can have your targets anywhere you want. So it could be a key level. As we outlined the key level, I put my first set of targets there, and then you can just break even and hold it. Come in with a counter trend line to trail your profits, whatever you want to do. Exactly. Exactly. But anyways, thank you for watching. This is it. Bye.